Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand all the latest cues from the day trade, starting from the benchmark index moves to the sectoral action and all the stocks that are passing the most in trade. And also we'll help you understand expert views to find out where exactly are opportunities emerging for you in this current market setup. But first up, a quick check as to how the benchmark indices, the Sensex and the Nifty, are doing. Remember, after 5 days of stunning rally on the day trade, constantly claiming those record levels, even in the morning session today, we've seen intraday high levels coming in, but the markets have turned softer. There is a lot of choppiness that you're looking at. Halfway through the mark of the trading session today, right now, the Nifty is trading just about 7 or 8 points lower at 19,381. 0.04% of a decline. So absolutely mild with a negative bias. Look at the Sensex, it's down by 65 odd points, 65,413 coming in on the Sensex as well. The broader markets are doing better, in fact, half odd percent gains for the mid cap 100 index and the small cap 100 index also up by 0.8% odd or so. So they are hovering near all-time high levels for sure. So definitely some pockets doing better than the benchmark indices. Let's also look at the sectoral action in today's trading space as well. Remember, yesterday it was the banking space that led most of the markets to pull up and reach those record levels yesterday as well. Today they have turned choppy. Nifty Bank is down by 0.2%. So what's causing this decline today? Financial services are down by 0.7% odd in today's trading action. The PSU banks are still up in trade. Remember, 1.15% up in trade, but despite that, the Nifty Bank is lower. So I'm guessing it's both the private banks and the private banks are absolutely flat right now. Very, very choppy session. But financial services is what is creating pressure on the Nifty Bank. You can see it's trading near the day's low at 0.6% odd in trade. Now, again, apart from this, you're also seeing some declines coming in on the realty pack today. That's a little soft. Consumer durables are a little soft, but the FMCG stocks, they continue to rise higher, 1.5% almost up in trade. The auto stocks are in a faster lane, almost up by 1%. You're seeing the pharma stocks up by 0.5% today. The IT pack up by 0.3%. The metals 0.25% up in trade as well. So some pockets, it's a mixed reaction. The oil and gas space also higher by 0.7, 0.8%. So the markets definitely skewed towards the favorites or the advances at this point in time. Most of the sectors are also up in the green, but some of the heavyweights creating some pressure right there for the markets, and therefore you can see the choppiness in the market. So which are the stocks that are still higher in trade despite the overall muted benchmark index moves? Bajaj Auto has come back in trade today, 3% up in trade. Divi's Laboratories, HDFC Life, Hero MotoCorp, BPCL, these are the stocks that are up in the green today. On the downside, you have the HDFC twins looking at profits being taken off, both down by over 3% in trade. Tata Consumer Products, 1.5% down. Eicher Motors, second day of a decline coming in after the Harley Davidson launch coming in, and also Bajaj Finserv down by almost 1% after sharp moves coming in yesterday's trading action. Let's get our expert in. Mr. Rajesh Palvia joins in from Axis Securities. Welcome, sir, and thank you so much for taking the time out. Would you say the kind of softness we are seeing or the choppiness we are seeing in the markets today are the first signs of profits being taken off the table after the stunning last 5-6 days of a rally? And would you be looking at this profit booking as an extended phase of a decline that could follow in?
Good afternoon. So, if we analyze the overall market setup, this is the fourth month we are seeing that market is showing bullishness, and this is the fourth continuous month where we are seeing higher high-low formation. So, which clearly indicates that sustained buying is there in the market.
Okay.
So, what has happened in last 4 months? We have recovered almost from the level of 17,000. Now we are trading at 19,400 kind of level for Nifty. So this is very smart kind of smart rally we are witnessing in the market. So the factors which were playing out in at the current moment in the market, that is first is FOMO factor is also playing out in the market, because a lot of cautious approach was there by the market participant in last couple of months because of there is no clarity in terms of rate hike cycle from the Fed. There is no clarity from the RBI. So now some clarity is coming back on the street. So that is giving us the confidence in the market, and that's why we are seeing that aggressive buying is taking place in the market. Now FIs are also buying in the market. So if we analyze the overall behavior of the market, we still feel that this rally can extend. Yes, there is some profit taking is happening at a higher
Hmm.
level, but
Mm-hmm.
still, if we analyze the holistic behavior of the market, still old economy stocks are still not yet participated in this rally.
Yeah, yeah.
This all-time high is done by most of the banking stocks as well as by the automobile stocks. So index is moved because of automobile as well as banking and financial. But still, if we look at other sectors like metal, IT, pharma, FMCG, even oil and gas sector, or you can say power stocks, these all stocks, cement stocks, these all stocks have not done yet well. So there is catch-up rallies, taking place in all these old economy stocks. So stocks like ITC have performed well, but
Yeah.
still, if we look at other stocks like Reliance Industry, Asian Paint, Pidilite, or Tata Steel, Ultratech Cement, or some other stocks which are large cap in nature, and they are still not performed in this rally. So we do believe that this momentum is going to continue further, and market is taking some pause, but sectorial rotation is going to play out in this pause, and maybe some consolidation we can expect in Nifty as well as in Bank Nifty, but this rally will extend further, and possibly Nifty can scale up to the level of 19,800 to 20,000 also in the continuation of this uptrend. So what has changed in last couple of months? RBI has shown pause in terms of interest
Yeah.
hikes.
Yeah.
We have seen good data from the GST collection. If we go with the guidance for the this quarter, most of the companies have shown good guidance for this quarter also. So we are optimistic in terms of results for this quarter also, and
Okay.
we
Okay.
and results will also play a good role to fuel up furthermore bullishness for this rally also.
Sure, sure. Mr. Palvia, I wanted to understand, would you advise profit booking at these levels? Because if one is sitting on a hefty profit, is it a good idea to book about 25-30% of the profits in the profitable positions that you are in? And perhaps then what you pointed out, come to the areas which have not moved, the traditional stocks.
So profit taking is always advisable in the market, but if you want to book profit and if you are thinking that market will give you again big corrective move and opportunity to buy again with the 5% down move from the current level, that is not going to happen in this rally, because this time it's a very different kind of rally we are seeing in the market, because this is not only led by the large cap stock, mid cap, small cap participation is very encouraging.
Hmm.
That clearly shows that confidence at retail is coming back to the street. It's not only the large fund driven rally we are seeing in the market. It's a broad-based participation. Delivery volumes have increased. DII, FIS buying figures are clearly showing that they are again putting the money even at all-time high level. So this clearly shows that if you want to buy some of the profit, if you want to do some of the profit taking on the stocks where you are sitting on the huge profit of 40-50% in a very short period of time, so you can
Hmm.
book partial profit. But I would not advise you to exit and sit on cash, because this really can extend, and maybe small cap and mid cap space can do well in this rally, because yes, there could be some pause in terms of large cap stock, because now we are entering into the earning season. So some pause we may say in large cap space, but small cap and mid cap space can continue furthermore upside. At that space you can remain invested. Some partial profit you can book at this current level, but hold your position, because we are expecting this really can extend furthermore from the current level also.
Okay, how are you looking at the valuations currently of the markets? The markets looking at this uncharted territory. Are the valuations justified at these levels? And what have been the historical indications? You did say that this time the rally is different from before, because you're seeing a broader participation from all the aspects, be it retail, be it the foreign investors, the earnings supporting, the macroeconomic conditions improving. So a lot of factors pulling this rally higher. But on the valuations front, is there still comfort when the markets are at these levels?
So for FY24, we are projecting our target of Nifty at around 21,000. So that valuations are still not that much stretched at this level. So we do believe there is still room for a lot many sectors which may give support to the market to continue furthermore, upside from the current level. So as such, there is no concern in terms of valuation at this moment. And again, this earning cycle will, again, earning season will also give us some more clarity towards what kind of, results companies are going to deliver for this quarter. So till now, we are very much comfortable in terms of valuation, and we still believe that, there is still room to, buy the stocks in metal space, in, FMCG space, even in financials are also looking attractive at this moment.
Hmm.
So there is no as such concern in terms of valuation, and we do believe that this momentum can extend further higher.
Okay. Are there going to be any key risks that investors should watch out for? We begun the second half of the 2023. In case the markets are continue this momentum and the investors continue to participate in this rally, is there anything that investors must keep on the back of their mind as an indication as to when things could perhaps turn worse from the current levels?
So the major risk was from the RBI rate hike cycle. That could be a one challenge for market. But since last two policy, we are seeing that there is a pause. So and data is also supporting that, and we are expecting that might be another pause, or some reversal can be there once we get any sign from the US Fed policy. So the concern is from the global front, that is Fed interest rate hike cycle, how they tackle their situation of inflation, and how they take a pause or give reversal on their interest hike cycle. If there is a reversal, then this rally can continue. But again, if they do some big hike in terms of interest rate, then there could be some knee-jerk reaction we can see in the market. That could be
Okay.
one risk. Another risk is, as we are now having our election in the next year. So,
Hmm.
and some states are also having election for coming year, in the current year also. So that could be a one factor which could give some volatility in the market based on the outcome of elections. So this is another factor where there could be some possibility of volatility in the market in going forward. But overall, if we analyze the overall macro picture, that is giving us confidence. But some rate hike cycle could be a risk, and election. These two are major trigger which we are seeing on the coming month. This could be a trigger where we can see a volatility in the market, but rest others factors are in support of bullish momentum to continue.
Okay. Rajesh, in case investors have missed this kind of a rally, those who now want to participate in this kind of a momentum, since you do believe that the upward trend is intact even now as we speak, where exactly should one put fresh money to work?
So we believe that yes, large cap stock should be there in your portfolio. So still we feel that real estate, cement stock, banking, financial, automobile, this space is going to continue. Even capital goods. So these all space one can look at the current level. Again, whenever you get any volatility in the market, you can start investing in this stock if you have not invested till now. And you can invest in the mid cap, small cap space also, because a lot of quality mid cap and small cap stocks are also doing good. And after underperformance of almost 12 months, most of the mid cap stocks are now giving a breakout on their monthly as well as on the weekly chart, which clearly shows that this really is going to extend further. So one can look at the space like textile. From lot many mid-cap stocks are available in textile space. Even chemical basket is also looking attractive at this level. So chemical space is also another space where one can look at to invest. So lot many pockets are there where one can start even investing if you get any opportunity in volatility of market. So you can start buying in all this space.
Okay, well, many thanks, Mr. Palvia, for being with us on the show and discussing all these insights with all our viewers. Markets at dizzying heights, but not to worry at this point in time. The market uptrend still remains intact, and the targets that Mr. Palvia has talked about, 20,000 going forward and then 21,000 also in the offing going forward. So there may be some short-term profit booking, which is advisable on a time-to-time basis. In case you're sitting on very, very handsome profits, you could look at partially booking out some profits, but exiting at these levels and cashing out your positions is not advised at this point in time. The markets are subdued at this point, 19,375 currently for the Nifty, down by 13 odd points, 65,383 currently for the Sensex, that's down by 92 odd levels at this point as we speak, but we'll keep an eye out on what the second half of the trading action has for us. Are there going to be any indications of a bounce back in the markets, or is the market going to snap the 5-6 days of a rally that we've been seeing and celebrating the markets? Continue to watch Business Today TV. Don't forget to subscribe to this channel to track all the movement in the markets. Many thanks for tuning in. Until then.
जयंत पाटिल जो पार्टी के लेजिस्लेटिव पार्टी के नेता थे उनको हटाने की मांग की है और आखिरकार ये पूरी